Hi everyone, welcome back to the FAR classes of USCPA. This is part 4 of ASC 842, that is lease accounting. Before that, please go through part 1, 2 and 3 and then jump into the part 4 because it is in continuation of earlier parts. In this video, I'll be walking you through in detail about what is direct finance lease and what are the sales type lease. Let's dive into to understand more in detail about direct finance lease and sales type lease.
So we'll be continuing with the lease accounting standard ASC 842. So in the last class, we have covered a complete overview of the lease accounting standards, and we have also covered from the lessee side the accounting treatment, whether it will be like finance lease or operating lease. And then we jumped on to the lessor side, and we have covered in the last class sales type lease. So in today's class, we are starting from direct finance lease. So direct finance lease, like we have seen all the 5 conditions. If any one of those 5 conditions are meeting, then that would be classified as a sales type lease because it is meeting the conditions of any item to be considered as a sales, similar to ASC 606 requirement, right? If none of those 5 conditions are meeting, but these 2 conditions are meeting, then we can consider that lease as a finance lease. So how from the lessor standpoint of view we need to do the classification? First, we need to look at all those 5 conditions, right? If any of those 5 conditions are meeting, then first we need to consider that lease as a sales type lease, right? If those 5 conditions are not meeting, but these 2 conditions are meeting, then that lease is considered as a direct finance lease. If none of these conditions are meeting, then the residual thing is operating lease. Then we'll be consider that as an operating lease. So let's understand what are those 2 conditions to be considered any lease as a direct finance lease. First one, if you see the present value of the sum of lease payment and any residual value guaranteed by the lessee and any other third party, or you can say unrelated party to the lessor, is equal to or exceed the substantial or all the fair value of the underlying assets. If the amount, present value of the amount you are expected to receive from the lease is more than the present value of the asset, right, then that lease can be considered as a direct finance lease. But it is probable that the lessor will collect the lease payment plus any amount necessary to satisfy the residual value guarantee. So here collection is also important, right? So you should have reasonable certainty, or you can say probability, that you will be collecting the money on a timely basis. If these 2 conditions are meeting, then you can consider that lease as a finance lease. If you see in certain circumstances for the lessor that are not manufacturer or dealer, then fair value of the asset can be the cost minus any volume discount or trade discount at which he or she has purchased, right? So makes sense. Again, like very much similar to, like one condition in the top 5, but here the important thing is the probable that the lessor will collect the payments. So that's also very much important condition. Make sense?
First category, sales and lease,
Hmm.
is this condition is not applicable. I'm just asking if it's not valid in that sense. The lessor is not will be expecting all the payment in that case.
No. Yes and no, if I say. So in case of the sales type lease, like, yeah, again, collection should be certain to consider any amount as a sales. That's also very valid point, but in standard it is not specifically mentioned. So ideally any item when we recognize as a revenue, because in sales type lease you'll be recognizing the revenue upfront, right? Hence that condition is being implied. But here for the direct finance lease, it is explicitly mentioned in the standard. In the standard, it is not mentioned, but ideally what you're saying is yes.
In that case, both the leases would be similar. It's just that explicitly that is not mentioned in that case. The first case, indirect
Yes.
the sales side lease, sorry.
Yeah. Yeah.
But essentially the meaning is same for both the leases.
Just for one condition.
One condition.
But other 4 conditions are totally different.
Okay.
So the key difference in sales type lease and direct finance lease accounting is that in direct finance lease, lessor do not recognize profit upfront. Whereas in sales type lease, you recognize the profit upfront. So here, if you remember in ASA 606, we have studied like exception to the general rule, which is installment sale method, right? In which we have understood like gross profit is being recognized based on the collection. Same will applies here also in the direct finance lease category. If it is a sales type lease, you can recognize the revenue as well as profit upfront. But if it is a direct finance lease, then lessor should not recognize the profit upfront. Rather, they will defer and recognize over the lease period as and when the respective leases are being collected. So here is the summary of the difference, how to recognize and do the accounting under the sales type lease and the direct finance lease. So first thing is lease receivable. How do you calculate the amount to be considered as a lease receivable? So in the sales type lease as well as in the direct finance lease, both the things are same. So first one is present value of the lease payments, which is received or expected to be received, plus any guaranteed value, present value of the any guaranteed residual value. So residual value is the amount you are expected to be received from the lessee at the end when he or she will obtain or purchase the respective assets, right? Both the condition, whether it's like both in both the situation, whether it's sales type lease or a direct finance lease, your lease receivable amount is same, right? Second thing is net investment in lease. How do you calculate the net investment in lease? Net investment in lease is basically the amount you are either invested or you are totally expected. So totally expected, if you see in the sales type lease, is your lease receivable, which we have calculated above, that is present value of the lease payment and present value of the guaranteed residual value which the lessee has committed to you. In addition to that, if you see the present value of the unguaranteed residual value, that means if there is any unguaranteed residual value which is over and above the guaranteed residual value. For example, let's assume you have a present value of the lease payment, let's say $100,000, right? And you have a lease of, let's say, 5 years. And after 5 years, you are expected to receive, let's assume, $20,000 as a guaranteed residual value. And the present value of the guaranteed residual value is, let's assume, $10,000, right? So today, your lease receivable is $100,000 plus $10,000, which is being guaranteed residual value from the lessee. However, after 5 years, the market value of the asset, and if you sell to any other third party, you will be in a position to receive $30,000, which has a present value of $15,000, right? In that case of scenario, $110,000, which is your lease receivable, plus additional amount of $5,000, which is 15,000 minus 10,000. 15,000 is total unguaranteed residual value which you are expected to receive if you sell in the open market, minus the guaranteed residual value which lessee has committed. So that $5,000 in addition you will add. So your net investment in lease would be $115,000. Make sense? Rahul, Manit, Gurmeher.
Yes, sir.
Yes.
Okay. So now if you see in the direct finance lease box number 2, so again it starts with the lease receivable amount plus present value of unguaranteed residual value. Till that extent, it very much same in the sales type lease. However, you will be reducing the deferred selling profit, right? In the sales type lease, you will be recognizing the profit upfront, but in case of direct finance lease, you will be reducing the sales profit, right? And that you will be amortized, or you will be considering based on the collection of the respective lease payment, right? Hence, the profit you will be reducing. And then if there is any initial indirect cost which you have incurred to obtain or to provide that asset on finance lease, then that also you can add, right? We'll be discussing in detail what is indirect, what is initial indirect cost. So generally it is legal cost, like the lawyer fees or stamp duties, or any such licensing expenses or any such brokerage fees you have paid, right? We'll be discussing that also in detail. But initial direct cost is that cost which is directly and specifically related to that particular asset finance lease, right? So far so good. Any doubts?
Yes, sir.
Okay.
Yes, sir.
सर एक डाउट था
Uh-huh.
सर, इसमें जैसे आप कह रहे हैं कि हम सेल टाइप लीज में सर हम अपफ्रंट ही हम बुक कर देते हैं अपना प्रॉफिट, राइट?
Profit, yes.
एट द टाइम ऑफ ट्रांजैक्शन, ठीक है।
Mm-hmm.
और सर लेकिन हम डायरेक्ट फाइनेंस लीज में हम नहीं करते, क्योंकि ड्यूरेशन ऑफ टाइम जब तक खत्म नहीं होगा, वो टाइम टर्म खत्म नहीं होगा, तब हम उसके बाद ही प्रॉफिट उसको बुक करेंगे, राइट?
No, over the period of time. Just same way like how we have done in the installment sale. Whatever the collection you are making on the respective collection, proportionate profit you'll be start recognizing.
ओके सर, तो सर मंथली वाइज हम इसको प्रॉफिट को वो करेंगे,
Yes.
डिस्ट्रीब्यूट करेंगे, एंड इन द एंड वी विल ऐड द इनडायरेक्ट initial indirect cost as well if it is there.
Yes,
Right.
if there is any initial indirect cost. So initial indirect cost is generally like lawyer fees, stamp duty, agreement fees, brokerage, such kind of thing. So we'll be
Commission भी आ
discussing
जाएगी सर इसमें?
commission, brokerage, yes, all such things.
Okay, we got it.
So third is interest income. So interest on lease receivable plus unguaranteed residual assets assertion, that is like gradual growth in the unguaranteed residual value. So initially, for example, you have purchased an asset. Let's assume you purchase a car. Let's assume you are a car leasing company and you have purchased a car to provide on lease. At the initial time when that suppose new car is being launched and you have purchased that car. So at initial point of time, let's assume the value of the car, market value of the car is, let's say $50,000. And you have given that car on a lease for, let's assume 5 years. And in that 5 year, you are receiving, let's assume $1,000 a month, right? So that's your normal lease rental. And after 5 years, you are expected, let's assume, to receive $10,000 from the leasee as a guaranteed residual value. And at that point of time, let's assume you have estimated the car may have a fair market value after the 5 year of $15,000, right? So the unguaranteed residual value would be $5,000 additional. So as and when the time has passed, and luckily that car has got into the trend, right? And people start liking it so much. Same way, like if you see like couple of cars and SUVs here in India, if you see like Thar is in trend, like this Creta is in trend. So same way, let's assume that car has got viral and into trend, and the company has started increasing their price, and in the market there's a shortage of car and people are dying to buy it, right? And now maybe after 1 year or 2 years, you can re-estimate the expected residual value, right? So now you have re-estimated expected residual value and it is, let's assume, $25,000. So that $10,000 additional which you are expected is also to be accounted for in the interest income, because you have not paid anything. It is normal escalation or gradual growth or increase in the price for which you have not paid. So that is being considered as interest income in your book. Make sense? Rahul, Gurmehar, Ashish?
Yes, sir.
Yes, sir.
Okay. So on the right hand side, if you see in the direct finance lease, so interest on lease
So
receivable,
how do we recognize that? Upfront or gradually?
no, over the period. Interest is
Okay.
always over the period. Interest income is always over the period.
Okay.
So interest on lease receivable plus unguaranteed residual value, same way, plus amortization of deferred selling profit. So in the net investment which you have reduced, but along with the interest income, you will be start adding those selling profit and start recognizing over the period of time. So this is similar to the exception to the general rule of revenue recognition in addition to the installment sale, right? So these are like different accounting treatment for the sales type lease and direct finance lease, which you need to be considered in the books of lessor. Any doubt on this table? And I'm sure this table will be very helpful. Like in none of the book I've seen, such kind of table which give you all the aspect at one place, so that like during the exam time, if you just looked at it, this table, it will be really helpful for you can say reconceptualizing all the key concepts. But any doubt, more than happy to respond. So far so good.
सर
Yes,
एक
sir.
छोटा सा डाउट था सर, हम जैसे प्रॉफिट सेल टाइम में तो प्रॉफिट हम उसी टाइम ही हम बुक कर देते हैं, राइट? तो सर इंटरेस्ट में हम क्यों उसको ग्रेजुअली वो कर रहे हैं?
हाँ, इंटरेस्ट क्या होता है? इंटरेस्ट इज टाइम वैल्यू ऑफ मनी.
हाँ हाँ हाँ.
Right? Time value of money will come with the time only. Right?
तो सर हम पहले ही
If-
जैसे
if-
प्रॉफिट अपना बुक करेंगे तो उसी टाइम हम इंटरेस्ट लगा के उसको ऑटोमेटिकली वैसे नहीं
No,
करते?
no, no. Interest is always a time value of money. So, for example, if you have a fixed deposit, right?
हाँ वो
On
तो है
that,
फिक्स
how do you earn the interest? It's over the period of time, because the money is being blocked, right? On which you are charging certain amount. So that is interest. That is the time value of the money which is blocked into the respective asset.
Yes, sir. Got it.
Okay, let's do an illustration for the direct finance lease accounting. So annual lease receipt is $32,000 for 4 years. Economic life of the asset is 8 years. Guaranteed residual value is 71,700. And the first payment received in advance on 1st January 2001. Let's assume interest rate given is 7%. And then present value of the lease receipt is already being given in the question is 116,000, and present value of the guaranteed residual value, which is 54,700, right? So what is present value of the lease receipt? 32,000 multiplied by 4. How much is it? Can anyone do the math for me?
128.
128,000.
128,000 is the actual collection, but the present value is 116,000, right? And what is the guaranteed residual value? 71,700, right? After end of the lease term, after 4 years, the expected guaranteed value is 71,700, but the present value of the same at 7% interest is 54,700 they have given to you, right? So total amount you are expected to be received, and the present value of the total amount you are expected to receive is 170,700. Make sense? Everyone is with me?
Yes, sir.
Yes.
Right?
Yes, sir.
And they
Yes,
have
sir.
given the asset carrying value. That means book value of the asset is 175,700. So book value is more than the present value here, right? So this shows this is a direct finance lease, because if the book value is less than the present value, then it would have been sales type lease, right? If you see second condition, economic life is 8 years, but we are taking the asset on lease for the 4 years. So we are not taking the asset for the significant economic life, right? So those conditions are also not met. But at the same time, if you see the significant amount is being expected, right? And the collection is probable. Hence, it is being considered as a direct finance lease, right? Now, let's see accounting entry in the books of lessor. So first, at the commencement of direct finance lease, what you will do? You will create a lease receivable asset, right? With what amount? Which is present value of the total amount expected to be received, which is 170,700, right? And you will be removing the asset. So you are converting that asset from the fixed assets to the lease receivable, right? Which is 175,700. So there's a loss of 5,000 on the conversion of an asset to the lease receivable, right? That is a plug-in figure you need to add, right? Then after, when you are booking the interest, first, I think again, this entry should come first. This entry should come first. So first, you will be recording the interest on lease receivable. Interest on lease receivable. Total lease receivable is 170,700, right? And if you see in the question they have given you, the first payment is made in advance, right? So if you have already received 32,000 in advance, then you will not be charging interest on that, right? So you'll be reducing 32,000 from the total value of the lease receivable, right? The value which you are expected to receive later on that you need to charge interest, right? Which is 138,700, and your interest rate given is 7%, right? So interest on lease receivable account debit to interest income, right? Here you'll be recognizing interest income of 9,709. Make sense? So far, so good? Yes? No?
Yes, sir.
Sir, okay, so sir, ये जो interest on lease receivable, so we are adding amount in lease receivable only, right?
Yes.
Okay. Yes.
Right. And now the final entry is when you are receiving 32,000 after a year, right? So that is cash account debit. Cash is coming in and you are reducing the lease receivable by 32,000. So this 32,000 include 9,709 of the interest. Remaining is the lease. How much is it? Can you do the math for me? 32,000 minus 9,709. So same way how we do installment sales or EMI calculation. So this much is the lease. Make sense?
Yes, sir.
Any
Sir,
doubt
if we are
on?
paying 32,000, so we are saying 32,000, and we are saying that the payment is advance.
No. This one is like after 1 year. To record the cash receipt.
What would be the advance payment at the start of the lease? It should be 22,291.
1 second. Right? Make sense?
So again, the advance payment would be 32,000.
Yes, advance, like they have already mentioned here. So the first payment is advance. This first payment is advance. So first you will do the receivable booking, and then you'll be reducing the cash collected from the receivable. Then you will reach to this amount, 170,700 minus 32,000. Right? And on remaining 138,700, you'll be calculating the interest. Right? And this is like after 1 year when you are making entry, so then collection would be less of interest. Make sense? Rahul, Kashish, Ayush?
Yes, sir.
Yes, sir.
Okay, so let's do a practice question. Which of the following is not one of the criteria for classification as finance lease? Which of the following is not one of the following criteria, one of the criteria for classification of finance lease? So I think I should be, which of the following is the criteria for classification of? Yeah.
Yes, sir.
So which one?
First one, sir.
Why?
क्वेश्चन में डाउट है क्योंकि क्वेश्चन में लेसी के अकाउंट या लेसर के अकाउंट मतलब किसके पॉइंट ऑफ व्यू से देखना है वो है ही नहीं। तो सर अगर हम देखें तो सेकंड, थर्ड एंड फोर्थ आर आल्सो दी criteria for considering finance lease in books of Lease.
That's a good point.
So
Okay,
first,
अभी
Yes, yes.
Rahul,
Rahul,
first जो point है ये डायरेक्ट सेल्स लीज का नहीं हो गया from lesser's point of view.
Direct sales lease would be when you have expected amount equal to or more than the present value of the asset. If the present value of the lease payments received or receivable is equal to or more than the value of asset, then it is sales type lease. Right? Make sense? So why option 2, 3 and 4 is not correct?
सर नो अल्टरनेट यूज में तो सर अल्टरनेट यूज तो होता है क्योंकि एक जो टर्म एंड के बाद हम अल्टरनेट यूज कर सकते हैं तो डायरेक्ट फाइनेंस लीज का पार्ट तो नहीं।
थर्ड एंड फोर्थ सर सेल्स टाइप लीज का क्राइटेरिया में आता ही है वो तो थर्ड एंड फोर्थ। एंड देन सेकंड जो है परचेस ऑप्शन, सेकंड का डाउट है सर मतलब।
Okay, Gurmeher, Kashish, what's your thought? Do you want me to take you back to the notes? One second. Do you want to take a look at this?
यस सर, तो सेकंड तो आता ही, मतलब सेकंड, थर्ड एंड फोर्थ ऑप्शन तो इसका मतलब सेल टाइप लीज का ही क्राइटेरिया है। तो यस।
Got it?
Yes, sir.
So do you mind explaining everyone?
No, sir, got it.
So second, third and fourth are primary criteria to consider any lease is a sales type lease, right? But the first one is not a criteria for the sales type lease. This is a criteria for the direct finance lease, right? And direct finance lease, when the term comes direct finance lease, it's automatically reflect from the lessor standpoint of view, because from the lessee standpoint of view, there is no concept of direct finance lease. It's only finance lease. Make sense?
Yes, sir.
यस सर
Okay.
सर ये सेकंड में कंफ्यूजन हो रही है कि परचेज ऑप्शन रीजनेबली सर्टेन टू एक्सरसाइज, तो सर ये सेल्स टाइप में है या नहीं है वो क्वेश्चन
है ना,
Because
सेकंड पॉइंट ही है।
you have not revised the notes.
सर मैं वो लास्ट क्लास का कर रहा था जो मेरी मिस हुई थी ना वो कल, तो उसी का ही कर रहा था
See,
वो रिवाइज सारा।
see, it's already clearly mentioned. The lessee grant the lessee an option to purchase the underlying asset, and lessee is reasonably certain to exercise that option.
यस सर गॉट इट गुड।
Okay, question number 2. What are the component of lease receivable for lessor involved in the direct finance lease? What are the component of lease receivable? First one is lease payment plus any executory cost, lease payments plus residual value, lease payment less initial direct cost, lease payment less residual value. What comes in lease receivable? What is, like, we have just done the calculation of lease receivable. How do we calculate the lease receivable?
Present value of lease payments plus present value of residential value.
Yeah. But what is executory cost? What is executory cost? Why the first option is wrong? I know, like, it's good to know the right answer, but it's also important to know why the other options are not right. So that, like, what we are selecting is with the knowledge.
सर लेकिन हमें तो पता ही है ये वाला ऑप्शन है, मतलब ये
Huh? No, what is executory cost? Give a guess. Like, I'll add to it, but at least share what comes in your mind. Rahul, Gurmeher.
any implementation cost, I would say.
Any implementation cost? Yeah, yeah, which we have discussed as indirect, initial indirect cost.
Yes,
right?
yes.
So that's an executory cost for legal fees or commission or something, right? So if you remember here, lease receivable, right? Either it's a sales type lease or a direct finance lease. It comes only two things: present value of the lease payment plus present value of the guaranteed residual value, right? So this initial indirect cost, this come as a net investment in lease, right? It is not part of lease receivable. Make sense? Yep. Ananya, Avneet, Prashant, you guys are very silent today. Huh? Pulak, Rachita. So far, so good.
सर तो ये executory cost क्या हुआ, मतलब ये
Executory cost is to execute the agreement, maybe like agreement fees, lawyer fees, stamp duty, commission, brokerage.
okay, तो मतलब
Which
ये
is like
initial direct
initial direct cost. Yes, absolutely.
Okay.
Indirect cost, initial indirect.
okay sir.
All right. So that should not be part of the lease receivable. That can be part of the lease investment, but not the lease receivable. Make sense?
यस सर।
Ananya, Avneet, Ulak, Prashant, all set?